Shriram Finance because that's the one that is in the spotlight after the company reported its first quarter's numbers. Profitability largely in line with estimates. In fact, we have Vishwanath who's in conversation with Umesh Revankar, who's the executive VC at Shriram Finance. Let's go across and listen in.
Expected that to kick off from the budget, that is February. It was picking up, but early onset of monsoon, I believe, postponed it.
Okay.
So post August 15th, typically that's a time where infrastructure spent or infrastructure projects kick off and start. That should give additional pickup for the credit demand. And that should help us because one is the rural being good. Rural demand is likely to be better in the second half. The other one is these infra, because once the infra projects come in, big scale, the steel, cement, all infra-related demand goes up. So you need bigger vehicles, you need construction vehicles and equipments. There are so many demand, the secondary demand come into the picture. I feel if all things come together and kick off, then we should be able to reach by this year end.
Okay. Quick question around the combination or the constitution of your loan book at this point in time, right? Specifically around gold loans. There, you've seen a degrowth. Now, this was one of those businesses that was being heralded as the next big thing because it's secured, but it's also easy access to cash, good for the lender. Has there been a change in that thought process for you?
Yes, I do believe gold loan can become a larger part of our overall book. We have drawn certain certain plans to make it big, and that's falling in line. Last 3 months, our disbursements were very high. In fact, we have grown disbursement by 20% year on year. But portfolio have not grown because some higher maturity, because it's a short-term maturity. 3 to 6 months is the maturity of the gold loan. So there was some higher maturity. I think we will be able to grow 20% year on year by the end of this year. So we do have a big plan for gold loan. And as we increase the reach, because gold loan is basically reach. You need to be near to the customer.
Right.
And we have sufficient number of large customers. In the sense, large number of customers who are taking gold loan from the outside.
Correct.
That's what, when we looked into their credit history, credit record, through all the bureau records, we do realize and recognize that our customers do take a gold loan from the other players in the market. And there will be a large number of people who will be taking from unorganized sector, which that may not be reflected in the bureau records. So we would like to address that and probably help the customers to walk into the Shriram rather than going to the unorganized market and probably benefit out of it. So that's going to benefit the customer. And gold loans are typically short-term working capital loan, which is the easiest part or the cheapest part of working capital for our kind of customers.
Okay. Coming to the asset quality picture now, of course, your gross NPA or the stage 3 has actually been relatively okay. But stage 2, that has shown an uptick. And alongside you, retail commercial vehicles for banks have also started showing higher delinquencies, higher slippages. Are you seeing any pressure building up for the future at all?
I don't really see that because we have seen these cycles going up and down. And since we lend to mostly assets, that is earning assets, we can always take back the asset. And so we are moving from stage 1 to stage 2 doesn't really bother us much. It is a temporary cash flow mismatch. And I do attribute this to early onset of monsoon at the end of June because normally the rain comes post June 15th in many parts of the country. This time it has come in the last week of May. That would have been unsettled some of the transactions or some of the activities. And that would have created a little higher delinquency, stage 1 to stage 2. I don't read anything. And most important thing is we all lend to individual retail customer whom we are in touch with.
Correct.
We don't outsource the our what called sourcing of business. We don't outsource the collection. We don't outsource even the if at all we need to take back the asset. We normally do it in house. So we are quite confident that our business is very stable and our customers are quite comfortable with the environment. I have not really seen stress. And I did mention to you that in the Q3 last year, we did see certain stresses building up in certain rural area. That is addressed now.
Okay. So a lot of people tend to look at Shriram Finance as a proxy for the rural economy. And if the rural economy is doing better, Shriram Finance is doing better, that sort of bodes well for the broader sort of economic momentum for India. I wanted to get your sense as to, is that the sense that you're getting when you're looking at the rural economy? Is there a general sense of optimism, of growth that you're seeing amongst your customer base?
Yes, largely yes. When I say rural, I covered semi-urban also, because semi-urban, rural, not big difference in their behavior. Most of their income comes out of the agri economy.
Okay.
So I do really see this, because what happened is, even if you take beyond the grains cultivation, you take a plantations like a rubber, coffee, cashew. These are all cash spices. They are all doing well, and they are able to export. So India's exportability has gone up significantly.
Right.
And the coffee, especially the other major producer is Brazil. They are having a challenge of, I think it is mostly drought there, and they have a problem. So most of the produce which India can produce additionally, I think it has a good international market. That is also a big plus for earning additional income for the agriculturists.
Right.
So generally, I think the environment is quite positive.
Okay. I'll come to the operational metrics a little bit on specifically around the cost of funds, because that's slightly still elevated, and the rate cut will sort of slowly come into the picture and it'll start benefiting you. But what is the outlook looking like? At what point do you come down from the 8.8 to say 8.3? Because the 50 basis points will come in for you.
Yeah, I see. In the book, we have improved from 8.96 to 8.85 in the last quarter, and gradually, at that rate, maybe around 10 basis points per quarter, there should be improvement, because incremental cost of borrowing is 8.34 now, and we also have cut the deposit rate by 40 basis points from the first week of August. I think gradually it will fall in. Every quarter, if I see a 10 to 15 basis point cost decrease, that will get added to the net interest margin to some extent. So that should help us. 15% of our total borrowing is floating. 85% is fixed.
Okay.
So the 15% benefit will accrue faster, because banks will pass on to us.
Correct.
Maybe a month or 2 or 3. But when the 85%, it takes time, because
you'll have to replace the borrowings.
Yeah, so it takes around 18 months' time to do that full cycle. Hopefully, the rate cut keep happening and also maintain at this level. In between, there can be some event and rate cut can stop and it can go up. We do not know.
We don't know at this point in time. But generally, are you expecting more easing from the regulator?
I think so, because see, inflation threw up very surprising numbers, because 2.1 is something unheard in the last 6 to 7 years, and that's really helped, because on average we expected, and the central bank, RBI, is always talking about 4% as a benchmark or the comfort line. So anything below 4 should give comfort to the RBI. Maybe there will be more to pass on. And liquidity, I think, is a one-time event, and it had already been announced. I don't think that there will be further announcement on the CRR done. But as far as the rate is concerned, there is a scope as long as inflation is under control.
But isn't inflation falling also a problem for your customer base who wouldn't be able to have that much of a pricing power, who then won't be able to pay you?
Agriculture commodity, because of MSP, they are assured of certain rates. But there is an advantage here because inflation bites rural much more than the urban.
Correct.
Because inflation travels to rural. In the past, inflation never used to go to the rural. Today, it passes on immediately because everybody is consumer of the producers. Like even soap, shampoo, all those things, they are all consumed by the rural area now. So it travels. So I think they are having a little surplus today than what they have maybe a year back or 2 years back. So that surplus is the additional money, what the rural people can invest, spend, consume.
Okay. Okay. One question around the margin situation, because 10,000 crore excess liquidity that you're carrying on your book, that is bringing down the margin at this point in time. Are you confident of Q4 it's sort of normalizing this 10,000 crore?
Yes, yes. Okay. As I was telling you, I'm hoping for the infra, what you call spend, that is going to create additional demand. So Q2, Q3, Q4, we should be able to consume. I think by Q3, we should be able to consume that additional liquidity. Then Q4 should be a normal quarter.